Hi, I'm Jim Beck, and welcome to this week's Trend of the Week video. Trend is U.S. oil production is not rising as expected. Now, we've got a situation where oil prices have averaged $100 a barrel over 2022, and that's usually been enough to kick oil companies into expanding production, expanding exploration, expanding spending. It hasn't this time. And in fact, right now, we're looking at, according to the Energy Information Administration, we're looking at U.S. oil production, so this is largely oil shale and offshore, up about 3% from December of 2021. Given that we thought that production was going to get up to 12 million barrels a day by the end of this year, the fact that we're only at 9.77 million barrels a day means we're not getting the production is just not coming. And you look at why. Lots of reasons. One is some reasons that have to do with the oil shale fields themselves. These are fields that deplete more quickly than traditional oil basins, so you're getting more production peaks out of some of these wells. You're getting companies that had a big stock of drilled but uncompleted ducts, and they've largely worked through those wells, so now they would have to spend more to drill new ones, and they're exercising a lot of capital restraint because they've been told by Wall Street and investors that, hey, we would rather see big dividend payouts from you rather than you're investing in a commodity which may or may not, where we can't really predict the future. And so we're getting a shift that companies have exploited when they wanted to expand production. They moved to their best properties, and now they're worked through those inventories. So we're getting into inferior properties. So production, you may be doing as much pumping, but you're not getting as much pumping. You're fracking, so you're pumped down to get but you're not getting as much of a return. So all of those reasons, as well as the fact that we're not sure exactly what the future demand curve is on oil, have led to underactivity, maybe underinvestment. If you're looking at this area, the two I like because of the resources are Pioneer. This is Pioneer Natural Resources, PXD. They pay out a very, very nice dividend, but it's a two-stage dividend. There's a core dividend and then a dividend that reflects how much money they've made this year. So we're up around 9% this year, it looks like. And the other one I look at right here is ConocoPhillips, again because of what they own. And you see this has been a very, very nice performer. Much lower dividend, but I think in terms of the spread of resources, as interesting a stock as PXD. So that's my spiel for the week. That's my trend for the week. If you like this video, please give us a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one. If you would like more of my stuff, you can go to my free site. That's jubeckpicks.com. 3 portfolios, including portfolios that hold Pioneer and Conoco, as well as Cheniere and Equinor, the big Norwegian oil company, and some ETFs in oil. Or you can go to my paid site, which has more ETFs. That's jubeckam.com. More ETFs, 6 portfolios instead of 3. Some inverse ETFs, more commodity ETFs, and some options plays to deal with this continuing bear market. Thanks very much for watching.